get started into the depth of this conversation, we want to talk about this gap between men and women, primarily the gender gap in financial inclusion. And just to kind of get everybody on the same page and also hear your perspectives, it would be interesting to hear each of your perspectives on what exactly is the gap, the gender gap between men and women in financial, but also non-financial services, and address whether you think there is a gap, and is this a problem? Is it an opportunity? Kind of where do you sit on this issue? Maybe we can start with Carmen, since she just finished, and we'll loop backwards.
Yes, of course, I will be happy to share. Well, Pro Mujer, we have been working in Latin America for 31 years now. We have been committed to positively impact the lives of underserved women and their families. And to answer your questions, there is a huge gap of access to financial and non-financial services of the most vulnerable populations. These are the poor, these are women, these are indigenous population, and the minority groups. There are still billions of people worldwide that they don't have access to financial services and non-financial services. And for example, according to the IDB, the financial gap in Latin America, it's of around between 86 and $90 billion. And actually 75% of the small and medium business women are actually stating that they don't have access to the needed financial, the needed financing that they need to become an entrepreneur or to grow or to start their businesses. So actually, as an organization, we try to give access to these financial services, but not only with financial services is enough. From Pro Mujer, we have this holistic approach, because you can give the money, you can give access to these financial services, but you have to train those women on how to use or better use or wisely use those funds. So we actually, as important as the access to financial services, for us it's important to give access to these educational services, to give them access to digital education, to financial education, to entrepreneurship education, to mentorship. So we are always looking to give them all the needed tools, the needed resources to progress and to develop their own businesses. With this, we are able to give women the independence they need, actually gain not only the independence, but also the income they need for their families. In the case of Pro Mujer, we are also not only limiting all what we give to the financial services, but we also provide health services. Why? Because if we don't give women the needed support to be in good shape and good health, they won't be able to actually get what they want, and to also be able to provide what they need for their families. So we also give access to these needed health services, preventing health services that women need. And actually over these years, we have gained a lot of knowledge of what our clients need. And that is what we want always to get: data, information, get to know their needs, their real needs. We don't want to predict. We don't want to be delivering what they are not looking for and what they need. So we define ourselves as client-centric. We are always trying to be very close to our clients, to understand their needs, and to deliver the services that are better or proper for their actual, what they are looking for.
Great, thank you, Carmen. I'm going to pass it over to Camilla, and maybe, Carmen spoke a lot about the most vulnerable, right? The really kind of bottom of the pyramid, lowest income groups, including women. It'd be interesting to kind of hear, Camilla, your take on this gap, and also if segments matter there.
Yeah, thank you, Barbara and Carmen. Great to hear about Pro Mujer's work and current focus. So I'm going to focus at a slightly different level, like further up market at the small and growing business level, and I'll provide a definition for that in a minute. But just initially, by way of background, MCE Social Capital is a nonprofit impact investing firm, and we use a blended finance model to lend to companies around the developing world with the goal of creating economic opportunity and building resilience for both women and smallholder farmers. And we have a strong climate and environmental focus across all of that. There are a couple of things that make MCE unique. One is we really do smaller ticket sizes, as low as $100,000 for small and growing businesses, and we go up to 3 million. We also go to frontier markets where there are few other investors, and I'll circle back to this on the question of female-owned companies' access to capital. But we've recently invested in places like Ethiopia, Mali, DRC, Nicaragua, places where there aren't a whole lot of other international investors coming in. We do all of this at a really low risk profile because of the thoroughness of our due diligence and the relationships we develop with our portfolio companies. Our overall 15-year default rate is about just under 2% annually. And I'll just mention a unique feature of our model, which enables us to dial up the impact in this way. Defaults on our loan portfolio are covered by a pool of guarantors who are family offices, foundations, and individuals, which is what allows us to go for greater impact and also allows us to source capital at a relatively low cost of funds from commercial banks and DMIs. So one part of MCE's portfolio is centered on lending to small and growing businesses. And I know there are a lot of definitions out there for SME and small and growing business. So just to share with you how MCE defines a small and growing business, these are companies that are typically in the early stages of growth with total annual revenues of between roughly $200,000 up to about $3 million annually, seeking investment ticket sizes of roughly $500,000. There is a massive gap in debt financing for these companies. We often come in as the first lender after a seed stage or a Series A closes, and by providing them debt financing for working capital or CapEx, we support the company in its growth until they can access local commercial bank financing or other sort of deeper pocketed debt investors. We see an even greater gap for female-led companies in this category, which widens even further when we start looking at some of the more frontier markets that MCE is willing to go to. So there are some real challenges out there for female-owned small and growing businesses in terms of accessing capital. And just to share where we are in terms of our own portfolio, we currently invest about 10 million in 16 small and growing businesses. 3 of those 16 have female founders or CEOs, so that's about 19%. We're seeking to improve that ratio and are working on new sourcing and origination approaches to identify more women-led companies and also more companies led by local founders and CEOs. But it's also something that early stage equity investors really need to be aware of as well. And in a certain sense, our pipeline is driven by what the seed stage equity investors will invest in earlier on. So it feels like there's a general need for greater awareness about the gap and why it exists. Barbara, if I have time, I can share briefly like a couple thoughts on why that gap exists from our perspective, or I can circle back to that in a later question.
I think we do have a couple, like a minute and a half, if you want to do a quick version, and maybe Q&A can help afterwards go deeper.
Okay, I'll maybe just share one data point that I think is really interesting. Some recent Harvard research looks at companies in the US and compares female-led startups with male-led startups. And they found that VCs and equity investors are asking different questions to female-led startups than to male-led startups. So male founders get asked promotion questions. So these are things like, how are you going to become a billion-dollar startup? Female founders get asked prevention questions, like, how are you going to prevent your competitors from stealing your market share? And I think this is probably one of the drivers of the lower capital raises for female entrepreneurs, at least in the US. But what I think is fascinating is all the data shows unequivocally that the female-led companies are more capital efficient. So they're driving greater revenues and growth on smaller volumes of capital, which I think is pretty impressive. And when we get to the business case, we can dig into that more.
Yeah, amazing. And I will plug a book also later. Helene, I'd love to turn it to you and hear your thinking around this, and also the way IFC has been segmenting these women's businesses and where the gap seems to be the greatest and the opportunity.
Thank you. No, I guess IFC's vision and IFC work is quite aligned with what Carmen was mentioning at Pro Mujer in terms of this holistic vision of financial gap, but also non-financial gap. And yes, for sure, access to finance is one of the most critical barriers to the growth of those women-led small businesses. IFC over the last years has collected a lot of data throughout the world to quantify the financing gap. So I'm not going to repeat the numbers, but there's also a lot of non-financial barriers that those women are facing and that really hamper the growth of their business and their access to finance, which are, for example, studies have shown that women have limited and lower financial literacy compared to their male counterparts. They have lower management skills, lower self-esteem, smaller professional networks, lack of access to new markets, more limited access to information and knowledge. And we've seen as well that a lot of women have a psychological barrier against growth because of the double burden they have. So a lot of them feel that if the company is growing too fast, they won't be able to comply all the tasks and the roles they're doing, whether as a mom, whether that as a family taker, family provider, community leader. So those non-financial barriers are very important to take into consideration when we try to address the gap in a holistic and integral way. It's not just giving them a credit, it's also providing them all the tools they will need to empower them, to strengthen their businesses, and eventually to help them access to finance. But I guess the picture wouldn't be complete if we wouldn't look at the supply side, which is the financial institution. And what we've seen is that the existing financial infrastructure does not really provide incentive to reach out to female clients due to a combination of factors, cultural barriers. We've seen that they have a perception that women-owned micro and small enterprises will seek smaller loan amounts compared to men-owned enterprise because they tend to concentrate in smaller segments or less innovative or less profitable sectors. So therefore, banks tends to not have the appetite or the capability or the efficiency to serve the segment, which is why it's important to work on both sides with the bank, but also with the women and kind of bridge this gap.
Yeah, fascinating. And to that point, Helene, I want to ask, and I'll start with Carmen again, just to loop back, but how are your organizations, and all of you touched on this a little bit, but it would be nice to hear about some specific interventions that you're engaging in to try to address the various gaps that you refer to. And I'll start with Carmen and go to Camilla and then back to you, Helene. Thanks.
Yeah, thank you, Barbara. As I said, we started, and actually Pro Mujer started as a financial institution. And we have confirmed over this year in our work that there is a business case in providing microloan to women. There is a needed for this type of loans, especially in these specific and underserved sectors. I have traveled personally through Latin America to listen to the different beneficiaries about their impact and about also the type and kind of financial services that how it have impacted in their lives. And for instance, we have beautiful stories about women that coming from, she's a transgender, for example, in Mexico, we have Carla Gonzalez. And actually she was sharing with me, take a look at this. I have not one hair salon, I have 3 hair salons. And we have helped create jobs in her own community. So, and there are thousands of similar cases. We have women that their kids are the first generation attending the university. We have also women that were able to, actually with this pandemic, able to reconvert and restart and actually bring income to their families, being the only ones able to do so. So Mujer supports on a very early basis more than 200,000 women per year, and that impacts not only in that women, it impacts in the family and it impacts in the community. So our focus as an organization is looking for that excellence and actually better be prepared for their needs, for the needs of our clients, to cover those needs. So we are bringing in much more technology. We are in this process of digital transformation. We are investing in human capital. We are trying to partner also and looking for those partnerships and alliances that can allow us to expand our footprint, that can allow us to actually deliver those new products and new services that our clients are requesting us from. So we are in the process of embracing, especially with the pandemic, this digital transformation and trying to deliver in new ways the services we are providing. So that is mainly what we are in the process of doing. During the COVID crisis, it was a challenge for us because we were very used to have and to be present, to have the delivery of our services were mainly in the presence and in our own offices. And actually in weeks, we were able to keep track of our clients, to get to know their needs, to get to know how they were doing, how we can support them. We give them access through chatbots to health. We give them access through WhatsApps and Facebook to also educational programs. So we were able to adapt ourselves to the new actual circumstances.
Thank you, Carmen. I'm going to pass it over to Camilla. And I think one of the things that I think is very interesting is as you think about filling this gap, is there sort of a woman-specific need that needs to be met, or is it sort of gender neutral or agnostic? I would love to hear how you guys are approaching that.
Yeah, it's a really interesting question. From our perspective, it's gender neutral. I would say when we look at kind of our pipeline and assessing potential small and growing businesses that we're going to invest in, it's no more work to fund a female-led small and growing business versus a male-led small and growing business. The loan sizes are equivalent to, or investment sizes are equivalent in the two, whether they're female-led or male-led. It is work funding SGBs overall because of the higher due diligence costs, and I think we'll get into that in a minute. But one of the things that MCE is exploring as a new model for getting appropriate financing to small and growing businesses, again, both female-led small and growing businesses as well as male-led, and especially for companies in the early stage who may have raised an equity round but are still on the early side when it comes to debt financing, is revenue-based financing. So this is a model that combines both a fixed and a variable return that allows lenders to better match risk and return. And for the entrepreneurs or the founders of the company, allows them to raise capital without the dilution that comes with an equity round and without the higher cost of equity versus debt. So essentially MCE in these, we've got 2 term sheets out right now for revenue-based structures to 2 different companies. In this model, we'd be charging a fixed interest rate to ensure minimum return, and then a participation in top line revenues at a proportion that would generate a return level sort of in between equity and senior debt. We're really excited about this model, but I will say there's definitely, our team is discovering there's definitely an education element. Some entrepreneurs are familiar with it, others are not. We've been talking to others in the space who are far more experienced in revenue-based financing than we are, folks like Gray Matters Capital, Collabs, Adobe Capital, and they've shared that from a time intensiveness perspective, it's really more like structuring an equity deal. But we're really keen to test it out and see how it works for us and for the companies we're financing. And we think it could be a really interesting tool, particularly for early stage female-led small and growing businesses who are having a tougher time accessing senior debt financing.
Yeah, wonderful. And yeah, I'm going to loop back to that book recommendation at the end because I keep hearing echoes of it. Super. So Helene, in your case, and the work that IFC is doing is a little bit different. Can you talk a little bit about your approach to filling the gap?
Sure. So the way we fill the gap, so we try to address the gender gap in access to finance, working at 2 levels. The first is at the supply level, working directly with financial institutions. And the second level is working with those women clients. So on the supply side, we first always try to start by facilitating gender intelligence trainings to bank staff, banks management, from top down to operational levels, to agencies, to relationship managers. The goal is really to raise awareness on gender diversity, not only as a business strategy, but as an institutional strategy. Because when we get like strong buying from the management, there's a higher chance to have it going top down. And we try to also showcase the women business case. That's, I can talk about it later. There's a business case for banks to serve women, and we try to showcase it by sharing best practices, case study, examples, and show them other actors and financial institutions that have paved the way and have reaped fruitful benefits from it. So it's a win-win. We also provide one-on-one technical assistance to bank to help them understand the segments through market study, portfolio analysis. We help them design a customized value proposition for those women-owned companies. And most importantly, we help them adapt the credit risk process and policy in order to improve the loan origination, because it's not enough to have a nice financial offer, commercial offer, if the risk policies and processes have not been adjusted to make sure women get in. And we test it through pilot before rolling it out. On the demand side, working with women, so we also help banks design programs that will provide women with access to information, to training, to mentoring, to tools, to software to increase the management of their businesses. We also help them create connections, so connect women to new platform, new markets. So the idea is really to help banks empower their clients as entrepreneurs, as person, but also to strengthen the businesses. Because if you do so, those women will become stronger, more profitable clients for the banks, who in turn will have more interest in serving them. So it's really looping all those benefits and create a win-win case, both for the women, for the banks, and for the whole ecosystem. And it's in terms of training contents, most of our trainings that we work out with banks are focused on improving the skills in financial management, because we feel there's a lot of lacking in this area, in sales. And we also help them prepare for a loan application or prepare for a pitch for potential investors. So they are like fully equipped to go further in their accessing to finance opportunities.
Yeah, that's wonderful. So each of you talked a little bit about a slightly different segment, I would say, and in slightly different markets. And I want to keep this in mind as we wrap up with our last question, because it would be great if you addressed it specifically to the segments that you're looking at. But the sort of age-old question is always, is there a business case, right? And why should I? What are the drivers of a business case if I'm going to make this extra effort to reach out to women? And I would love to hear all of your takes on sort of what is this business case, if there is one, particularly thinking about, the differences between men and women, and I would say more Carmen and Helene, but we'll actually, let's start with Helene this time, if that's okay, and go from like SME to maybe Camilla, the larger ones, and then micro.
Okay. Thanks, Barbara. Yes, I mean, from the IFC perspective, we have done a lot of study throughout our different engagements throughout the world through different financial institutions to be able to identify and quantify and determine the business case. And there's a business case for banks to really target women's markets. And if they don't do so, they really are missing out. The four main variables and angles that really compose and are part of the business case are the fact that first, serving women help banks increase their market share, because as bank serving women entrepreneurs, provide them like a source of market differentiation in competitive markets. It helps the banks establish a reputation as innovator. It enhances corporate social responsibility. The second thing is that it has been proven throughout our studies that women present higher cross-sell levels and higher loyalty rates. Once the main banker status is achieved, women tend to have higher cross-sell than their male counterparts, up to 2 times higher. They show higher activity rates and stronger retention rates. So when you have like an emotional relationship and a strong relationship between the bank and the women, she has a tendency to stay longer and to engage more with you as a bank. And the third variable is the women have a stronger propensity to saving compared to their male counterparts. We have seen and measured that the deposits from women typically grow at a higher rate and they stay for longer time than their male counterparts, which is an immense benefit for banks in terms of net funding surplus. And last but not least, women have a positive risk behavior. It doesn't mean that they don't like to take risk. They take risk, but in a more assessed and informative way. So they have lower risk tolerance, mainly because of all the roles they have to accomplish as family leaders, as community leaders, as entrepreneurs. So they have more risk alert and conscious. And we have seen that their default rates are either the same or better than their male counterparts. And studies have proven as well that women-led businesses have a tendency to outperform those by men, which increase their likeliness to repay their loan. So those are the four main pillars on which we are really, really advocating the business case for women, and the reason why banks should definitely consider women as a profitable segment. So it's a win-win, increasing access to finance, increasing the social economic impact of women, but also getting return on it, right? And creating a win-win situation where everyone gets benefit from it. So
that's great. I'm gonna move over to Camilla on this, but I think that Helene just wrote the thesis here with her 4 points.
Yeah, I think, Helene, it's really interesting to hear your perspective, like the commercial bank perspective, because it's actually really similar to what we see on the investor side of the table as well, but with some nuance. And I think also the last point on risk, right? We're seeing that bear out over the past 18 months as we've seen how women-led businesses tend to fare better in crisis situations. It's also really encouraging as well. So I'm just going to share one thought on this, and it's from my previous role at MIX, the data platform for inclusive finance that's now housed at the Center for Financial Inclusion. So when I was there, we designed and ran the Inclusive FinTech 50 initiative, which is a competition designed to recognize inclusive early stage fintechs. And through that, we generated a data set of 400 early stage inclusive companies around the world, very similar in size to MCE's definition of a small and growing business. And there were a couple really interesting takeaways with regard to gender and performance of the companies and ability to raise capital. And I'll just give one example here, because I know we want to get to the Q&A. So in this sample of 400 companies, women-led companies raised less than 60% of what their male peers did in the early or seed stage of capital raising, but then they outperformed in the Series A, where they raised 112% of what their male peers did. And what this suggested to us is that the initial barrier to entry for female-led companies is higher, and the ones that do manage to raise seed funding or early stage funding then outperform their male peers. And what this tells us that investors are overlooking strong female-led companies, whether they just aren't being introduced to them because of the well-known network effect where you fund what you know, or whether they're being held to a different standard. More research needs to be done. I would also say in this data set, there were certain performance metrics with regard to the performance of the companies that were more highly correlated with female-led companies. So outreach to clients was one, customer churn was another. So I think we're starting to see some really strong research and data kind of backing up what we all know and kind of the points that Helene just outlined.
Wonderful. And just to kind of finish off this last point on the business case, Carmen, I know your target market is a much lower micro segment, and we actually have a question in the chat already about the business case for micro lending to women.
Okay.
If you could just address that real quick and say, tell us if Pro Mujer sees a business case and what the drivers of that might be.
Yes, of course. And yes, for us, microfinance is everything, but we are also, as an organization, looking and focusing on investing not only in the needs of the women, individual women, but we are also looking in businesses that can promote gender equality. We are looking beyond. We are looking and we are trying to see and take a look into gender as a whole. And that is the positively impact that women and girls can generate in the economy and actually in the society. So yes, for us, microfinance is one of our main pillars. It's one of the 4 main pillars in actually what we promote and how we deliver that microfinance is through communal banking. This is a methodology. These are groups of 8 to 30 women that get together once a month, mainly, and actually they receive in those meetings not only the money, or they pay at that moment, but they receive at that moment also the capacity. It's the moment they receive the education. It's the moment that they get together and they get to share the lessons learned. They get to share how they are doing. We get to know what they need. And at that moment also we promote a better health and we promote that they use our health services. So it's, as I stated at the beginning, we look into a holistic approach and we look at the women itself, at the woman, actually what she needs, what is she's looking for. And we look at the woman and we look at the family behind that woman. If we, as I said at the beginning, if we impact, for example, in Nicaragua, we are able to reach 40,000 women per year. And we work with those women, but actually, if you multiply that by 4 at least, that is a family, we are able to reach more than 1,200 people. So it's actually a huge impact that we can generate in a small community. And that is what we look forward to. As an organization, we are always trying to reach beyond what we are doing. And as I said, we are looking into this gender perspective. We are actually looking into genderless investing right now, looking into these new financial instruments that we can develop and through which we can reach other women and other needs. So we are always trying to develop and to read, have a better reading of what is needed in that community, in the society and the countries we operate.
Great, thank you. And I think on the, a lot of the points that were touched on today, I just put a little plug for a book that I have been very influenced by that talks a lot about these issues, if anyone's interested in the chat. But what I will also say is that microfinance is a model that has been quite successful and profitable over the last 3 decades. And so the business case has certainly been there. I think some of the challenges that it faces today are evolving as a result of digitization and competition. But, for now, it continues to be a viable financial model. And with that, there is a question in the chat about this business case question of microfinance, but I want to just jump back to a prior question to make sure that gets answered by Chris Starr, who asks which markets, business areas, or geographic areas, and I think segment might be part of this conversation, that you're working in has the most potential from an impact perspective in terms of closing this gender gap.
In our case, it's Latin America. We are based in Latin America. We have operations, actually our own operations in 4 countries. We were born in El Alto, Bolivia. It's where we have our most biggest operation right now, but we have also operations in Argentina, in Mexico, and Nicaragua. But through partners, we are able also to operate in other 7 countries in Latin America. We are able to give access and reach women also in Peru, in Panama, in Costa Rica, in Colombia. So actually through partners, we are able to reach 11 countries in the region. And for us, Latin America still has tons of potentials, opportunities, and challenges to face.
Thank you. Helene, I don't know if you have a thought there.
So now, in terms of geographic aspects, we work at IFC throughout the world. So I can't say that my region is more important. Even so, there's a there's a lot of socioeconomic impact and potential in the region, but I believe my colleagues and the other country office have also equally opportunities to develop. But in terms of segments, I would say our work is very focused on micro and small segments, because when you look at women, they tend to have a higher representation in the lower segments. So I would say that micro, small, or very small, are where there's higher drive for socioeconomic development, because that's where most women are. And I'm speaking of that at least for LAC, where I am based. That's what we've seen.
Great. Camilla, did you want to add anything to that?
I would just add, in terms of segment, building on what Helene said, I think there's so much value being left on the table, economic value and impact value being left on the table by investors not looking at finding and sourcing female-led small and growing businesses, SMEs, and all the way up to small and growing businesses. And it's a personal passion of mine to see what can be done to address that. It, to me, just seems so clear that if we can direct more capital to these companies that are in many cases outperforming, we're going to generate greater economic value and impact.
Yeah, it's kind of a no-brainer arbitrage, right? Like a symmetry, but hey, those who do it maybe will make lots of money. And there's another question, just kind of speaking of money, that has to do with foreign exchange risk. And I think it also speaks to the funding models that, organizations like Pro Mujer have, where they're borrowing a lot of money in hard currency from different countries and then lending to developing countries. But the question specifically asks about MCE's guarantee structure. So maybe we'll start with Camilla there. And if anyone else wants to weigh in on currency exposure, currency risk, then we can kind of move to someone else.
Yeah, I actually may, I'll share a little bit about MCE's model, but it'd be interesting, I think, to hear from others as well on this. I would just say one thing: we lend in both hard currency, US dollars, and in local currency, hedged. And a lot of our ability to lend in local currency depends on the availability of affordable hedging, as with most players trying to invest in emerging markets. Our guarantee model, what it actually does, it doesn't cover the FX losses, although that could be an interesting application of it. It covers defaults on our underlying portfolio. So just to clarify how the guarantee model is structured there.
Great. I don't know if, Carmen, you want to address any foreign currency risk that you all have to manage.
Yeah, Barbara, you describe it very well. We actually get funding from abroad, usually the US, Europe, and we bring those funds to Latin America. And it's a challenge for us as a microfinance institution. Sometimes we are very questioned because of our very high interest rates, but the model actually is very costly. That is why we are always looking for this operational excellence, but also it sometimes is because we are not able to get access to those needed funds abroad at a better rate neither. So sometimes it's very difficult for us to get access to those interest rate that can get into a country in Latin America that has a huge devaluation sometimes of their own currency, and manage all those challenges in a better way or the best way to get finally to the women that needs that money at an interest rate that is accordingly, or it's something that they will be able to pay. So it's really a challenge. It's sometimes very difficult. We sometimes look very much for funding that can be accessed at the local level. For us, a microfinance institution usually also get access to this local funding, and sometimes it's much better for us because that the difficulties on predicting the currency changes that you may have, for example, in Argentina, it's a challenge.
Great. Helen, did you want to weigh in on this as well? I think it would also, while I have you, Helen, on this point, I would love for you to comment on interest rate sensitivity and whether you've identified a difference between men and women on interest rates. That might be kind of a nice complement.
So on the that's not my area. I'm more focused on technical assistance. But what I can say that IFC2 provides long-term financing to local financial institutions to increase their lending capacity to specific segments, and in this case, women on micro, small, medium enterprises. We do not directly interfere in the interest rates that the banks decide to apply for their clients, right? But what I've seen from an advisory service perspective is that, we have seen it in different studies, is that women are not as sensitive as men to the interest rate. So we have seen that men will always be the hunters for the better rates. So they will always try to, they can leave the financial institution tomorrow because the one next door is offering like a small, tiny, better rate. And women have a different approach. I'm not saying they accept any rates, but if the bank managed to create a strong emotional ties, providing her not only with the finance, but with all the non-financial aspects, she will be less sensitive to the rates and she will stay longer with the bank. And men, we have really seen that they were like cazador, like rates hunter. They will just leave tomorrow because next door they have this like, and this is a strong point for also the business case in serving women, because they turn to be more loyal clients, staying longer. So whatever money the banks are investing in women through financing or non-financial programs, there's return through this.
Yeah, and just to kind of piggyback off of that point, Helene, when we had a conversation prior to this discussion together, we actually talked about the time horizon a little bit, and when do you get your return on investment on women versus men, and whether there's a difference there. And it speaks a little bit to one other question that I kind of addressed earlier, but not fully, from Fernanda, who's a student of mine, I'm very glad to see here, about sort of the business case for microlending and why investors aren't jumping in, right? Why don't we see more investment? So I think if we could just spend the last couple of minutes addressing this time horizon issue, I would love that.
Sure, I can start. So something interesting we've seen. So on one hand, we've seen through different studies that women are definitely a strong business case for banks, and they really have interest in serving them. And we took this a little further, and we were able to measure the impact of those programs, financial, non-financial, especially the non-financial service program, which are access to education, to market, to information, to connection. And we launched a report last year in partnership with the FMO about the benefits and the impact of non-financial services in fostering the growth of women-led SMEs for banks. And we were able to quantify that banks who invest in this kind of trainings, education program, what we call non-financial services, were able to get a positive returns on their investment within 1 to 2 years. So it's very quick. And this was driven by 3 or 4 main indicators. The first was that women who would receive access to training, capacity building, etc., this would translate into an increase in the average loan size of women clients, which is benefit for the bank. The women who also received the non-financial services were able to become stronger and healthier clients and consume more products through higher cross-sell. They would also be more satisfied and stay with the bank for longer term, so higher loyalty rates. And women who are stronger and healthier customers have also reduced NPL. So through an increased loan volumes, share of wallet, loyalty, and reduced NPL, you can within 1 or 2 years get back your positive return on investment. So those are the main drivers.
Great. And did you see a difference with men, or was that not really part of the evaluation?
So we saw as well with, so for general public, those 3-4 main drivers were estimated, but with women it was more accentuated. So it really showed that women are more sensitive to attention, to long-term relationships, to, like assertive value proposition, they give it back to the bank in the long term and in the long run in terms of financial aspects.
Great. I know Camilla had another insight from her work.
Yeah, I'll just share briefly from MCE's perspective. As I mentioned earlier, it's really no more work for us. There's no difference in the upfront cost, time, effort to fund a female-led small and growing business as opposed to a male-led small and growing business. But it is a huge amount of work funding small and growing businesses, period, because of the higher cost of due diligence and the greater kind of runway to get to know the company and have the company get to know us as an investor. And so we tend to look at these relationships, whether they're male-led or female-led, as long-term. And it's interesting when we look at kind of data across our portfolio, particularly on the part of our portfolio that invests in small and growing businesses, we know that some of our loans are actually not going to break even on the first round. And we're looking to the second or even potentially the third round to break even and start having that be a positive economic return to MCE. So we really come in with a long-term view, seeking to build relationships with the founder and CEO, supporting them in their growth, introducing them to other investors, other sources of growth capital, providing sort of tailored and ad hoc support to them as they're growing their business, and really trying to be a partner at this really crucial growth stage where we don't see many other international lenders.
It's so interesting. I'm reminded of this focus group I did in Guatemala ages and ages ago in a market, and we drew a woman and a little heart, in the middle of her. And this one woman said that heart was reserved for her financial institution because they support her much more than her husband does. And so, the concept of relationship, can kind of extend beyond just the financial transactional, relationship. And in some ways, that's sort of what you're all talking about, right? The sort of, we have multiple needs, and a financial institution can really build a relationship that satisfies some of those needs. It's very, very
yes, and can really change the life of that woman and the life of the family itself, no? And I can share with you tons of stories, and there, as Helen and Barbara, you share also some stories. Camila share also some stories. Helen was stating that the information they share, it's there. There are tons of studies. There are tons of research. We have repeatedly demonstrated that businesses that are led by women and that women are in their leadership positions can outperform. And there are tons of investigations that will showcase that women create a tremendous impact and a multiplier effect, because it's not only her, it's her family. Because usually what women do is that they invest what they generate in their families, in the education, in their homes. And so that has a huge impact. Nonetheless, microfinance, we know very well they are very questioned, but they are needed because it's actually the only way these underserved and these poor populations can access the needed finance. And this needed finance is generating an impact. But of course, for me, if you ask me, traditional investors and actually funds need to change their mind, and they need to also be more flexible. They need to take different steps. They need to take more risk. They need to be open to change. And also I encourage them to look into the impact they are generating, because if it is not through microfinance institutions as Pro Mujer, these underserved women won't be able to access the needed finance.
Sorry. Thank you, Carmen. We are going to have to wrap up, and I see there are a few questions, and thank you, Camilla, for addressing some of these online on the chat, because we probably won't have time to get to too many, but I did want to just kind of pause and thank you all for participating. I noticed today that it is National American Business Women's Day, so sort of a timely day to have this conversation. But also to this point that Nellen makes here at the end about, well, if this is such a great opportunity and McKinsey's been shouting it for decades, why hasn't this gap been closed yet? And I'll plug something else just because that's kind of what I'm in the mood to do, which is we've been working, I'm co-founder of a network of women in Latin America who work in financial inclusion called Andares. And one of our strong points is about leadership, right? Who is leading these institutions? Who are the investors? Who are the bankers? Who are the leaders of the institutions lending or offering financing to women? And what we see often is a pyramid structure where at the bottom you have lots of women employees. And as you move up the ranks to middle management, upper management, CEOs and boards, you see fewer and fewer women represented. And that has an impact on the soul of an institution, on the way the institution relates to its customers, on the way it identifies opportunities and business opportunities in particular. And so, we really push in this organization to create women leaders and to support women so that they can move into leadership positions, because it is a huge information asymmetry that we can start to close if we're more engaged and involved in it. It can't be totally male-led. It has to include women as well. So we wrote a paper about it years ago called Starting at Home. And the message there is, if you inside your organization don't show that you believe in women, trust women to lead, how are you going to support women who are then going to drive our economies? So that's kind of my little closing plug. I'm going to hand it over to Guillaume to close up, and thank you all for participating. Thank you to our wonderful panelists for sharing their wisdom, which I think is wonderful. And yeah, have a great day. Guillaume.
Yeah, thank you very much, Barbara, and Concur. A huge thank you to all of you, Helene, Camilla, Carmen, Barbara, for your insights. If to our members, if you want to continue the conversation, we're going to have a networking session on October 13th to again go through specific questions you want to go through and maybe look back on the topic. I know, Barbara, you mentioned that you're going to write on the topic soon, and we will share that that publication with our members. Again, a huge thank you, and looking forward to continuing the conversation. Have a great day, everyone.
Bye-bye.
Thank you.
Thanks, everyone.
Great.
Thank you. Bye.